You are provided with the following trial balance. Extract from the trial balance of AJ Rancoon as at 31 July 2014. 2014-2013, cost of sales note 1, credit losses note 2, salaries and wages note 3, and inventory note 4. Now note 1, included in the cost of sales is an amount of 120,000 which relates to a write-down of inventory to its net realizable value. There was no such write-down during the 2013 financial year. Included in the credit losses are actual credit losses of 15,000 Rand, 2013, 9,200 Rand. Credit losses are not viewed as administrative expenses. Guys, now what we have to disclose according to IAS 1 is actual credit losses written off. Now, why will that be 15,000 and that credit losses amount there is 20,000? And that one is 11,400 and that one is only 9,200. Because we are allowed, when we do an adjustment in our allowance for credit losses account, to do it directly against the credit losses expense account. Therefore, there will be a difference between the actual credit losses written off and the amount disclosed as the expense credit losses. So all we have to disclose is actual credit losses written off. Now, 3 salaries and wages include the directors' emoluments of 450,000, 213 400,000 for executive directors, and 250,000 2013 200,000 for non-executive directors. All emoluments relate to services as directors. The remaining cost relates to employees. The company usually classifies these expenses as administrative expenses. Now, clear out of the question as well, you can see that we have to use the function of expenses method in order to show our expenses on the face of the statement of profit or loss and other comprehensive income. That's the reason why they explained to you that one is not admin, and then these expenses, that is admin expenses. And then inventory consists of following: finished goods, raw material, and stationery. What they want from us is show all the items in the above trial balance, how it should be presented and disclosed in the financial statements in accordance with the requirements of IFRS IAS 1, in other words. Good. So let's do the income statement first. Now, the first thing that you should know is the name of the entity will be on a separate line. So AJ Rancoon Limited. And the second thing then is we're going to put the heading of the statement that we're busy with underneath the name of the entity. And we're going to do the statement of profit or loss and other comprehensive income first. Statement of profit or loss and other comprehensive income for the year ended 31 July 2014. Important, the 2014, the year, the current year, will always be in the first block, if I can say so. And the furthest, the one on the most right-hand side, that would be the previous year, 2013 Rand. Not the other way around. You will not get any marks if you're going to switch it around. The denomination, Rand. We're going to start with sales. We do not know what the sales amount is, so you can just put excess, and then cost of sales. But guys, please try to do this first before you look at the answer. Otherwise, you're going to waste your own time. Cost of sales 500,000, the previous year 433,800, and they say included in that amount is 120,000 net realizable value adjustment. So on the face of our income statement, we are only going to show the 500,000 and the 433,800 gross profit. But in our notes, our statement of profit or loss and other comprehensive income, we have to write a note on profit before tax. And we have to disclose in our profit before tax note the net realizable value adjustment. So if we go there, AJ Rancoon Limited, notes to the financial statements for the year ended 31 July 2014, and again, 2014 Rand, 2013 Rand. Profit before tax, that is the name of the note that we're going to write, profit before tax. Good. Profit from operations is arrived at after taking the following into account, or you could have said profit before tax include the following line items. And remember in our profit before tax note, that is a note where we're going to distinguish between income items and expense items. Not on the face of the income statement. There we just carry on gross profits, administrative expenses, other expenses, and in this case there was no selling and distribution cost, financing costs, and then profit before tax. Then in our profit before tax note, under expenses, inventory write-down to net realizable value, or you could have said net realizable value adjustment on inventory, 120,000 and nothing in the previous year because we didn't have any particulars in the previous year. Good. Note number 2, included in the credit losses are actual credit losses of 15,000, 2013, 9,200. Credit losses are not viewed as administrative expenses. Now, it's definitely not a selling and distribution cost. Why not? Because it's not a salesperson's responsibility to make sure that if we provide credit to a customer, that that customer is creditworthy. That is either administration or other expenses. Now, in this case, I say they are not viewed as administrative expenses, so we will classify that then as other expenses. On the face, other expenses, 20,000 and 11,400 rand. 20,000 and 11,400 rand. Note 3. Oh, yes, and then in our profit before tax note, we have to declare actual credit losses written off as well. So here, there, expenses, next one, credit losses written off, the actual amount, 15,000 and 9,200, not the value of the expense account, but the actual credit losses written off. Good, then salaries and wages. Note number 3, the 800,000 and the 750,000. That include directors' emoluments of 450,000, last year 400,000 for executive directors, and 250,000, 200,000 for non-executive. All emoluments relate to services as directors, and the remaining cost is for the other employees. Now, we have to show directors' emoluments separately in our profit before tax note. And in that note, we have to distinguish between executive directors and non-executive directors. And under each one of those, we have to distinguish for services rendered as a director and for other services rendered. So therefore, it is a breakdown. Then amounts that we're going to pay to our employees, like salaries and wages and things like that. That we're going to show as part of employees' remuneration. So the first thing, employee cost, and this excluding directors' remuneration, that is just for note purposes. It should not appear in your note. It's just for you to know. I wonder whether I shouldn't copy it there so that you know it's not part of the note. That one as well. Let's do that. There. So that should only read employee cost with a total. Werknemersvergoeding in Afrikaans with a total. And that will exclude the director's emoluments. So if the total was 800,000, 400 plus 450,000, sorry, plus 250,000. That is for director's emoluments. So the remaining amount, that will be for our employee cost, which would be 100,000. Lastly, you're going to do the same computation. You're going to take the 750 less the 400 less the 200, and the remaining amount, that will be employee cost. Then director's emoluments. Now under director's emoluments, please go away. Under director's emoluments, we have to distinguish between those amounts paid to executive directors and those amounts paid to non-executive directors. And under each one of those, we have to distinguish further for services as directors and for other services rendered. Now, in this question, everything was for services, related services as directors, so 450,000, and non-executive and executive directors 250,000. So 450 for executive directors and non-executive directors to 50, with the comparative figures which they also gave us 400,000 and 200,000 rand. 400,000 and 200,000. Great stuff. Then the next one is inventory. Now inventory we know is a statement of financial position note. Note 4 inventory consists of the following: finished goods, raw material and stationery. That you know that the note inventory, we have to show the different classes of inventory. So inventory comprises of finished goods and the amounts, raw materials and the amounts, consumables and the amounts, with a total of 820 and 812, and that we know is on the face of the statement of financial position.